Shaw with the Investing News Network, and we're here at PDAC in Toronto. I'm here today with Mark Ferguson, Associate Director and Head of Mining Studies for the Metals and Mining Research Division of S&P Global Market Intelligence. How's the conference going for you?
It's been very good. It's very positive. Had some lots of good discussions, lots of good positive energy.
Great, awesome. So tell me a little bit about your background and some of the work you're doing.
Sure. So I work for S&P Global Market Intelligence, like you said, and I'm part of the Metals and Mining Research team. My team itself is based in Halifax, but we also have an extensive team out of London, England. And for the most part, my team focuses on the exploration sector, so tracking financings that are kind of going to impact the junior sector, or looking at the budgets for all kinds of companies across the world. So those are the two main aspects that probably have been the focus of my discussions and my presentation yesterday. So.
And so what's happening with the exploration sector? I've heard that it's picking up.
Certainly has. Roughly 2 years ago, we saw a little bit of momentum in metals prices, and this really spurred on an initial surge in financings, especially by the junior companies. And later in 2016, we started to see some of that money actually hit the ground. So we saw some drill activity start to pick up. And that really carried through 2017. So financing levels have definitely improved, but they're still fairly far behind where they were 5-6 years ago during sort of the heydays and the boom times of like 2011 and 2012. So.
Do you think they'll ever get to that level again?
That's a really tricky question. I mean, as we saw at the beginning of February, there was a lot of volatility in the markets, and certainly that can put a damper on things. So, we're expecting markets to do pretty well again this year. But I don't foresee us going back to the heydays of a rise of budgets by 40% this year or even next. I think there's a little bit more cautious approach by investors and by the miners and explorers themselves. They've taken a much more gradual approach to ramping up their activities.
And I heard, I did watch your presentation, and I heard that there's been some drilling numbers that have come out recently. It's been pretty high.
Absolutely. Back in November, we had, for the first time since we started tracking that metric, more than 300 projects being actively drilled. And then in February, we ran the numbers just on Friday, and more than 6,000 drill holes were completed, which also was a long-term record for us. We haven't seen those numbers in quite some time. So.
And is that worldwide? Is it evenly distributed, or are you seeing more drilling in one area?
Off the top of my head, I can't comment on where that drilling is coming out of.
Okay.
But certainly there's been a focus on gold projects. That's really what started to lift the junior sector back in 2016 with the financings, and then likewise the projects that were getting drilled, there was a large chunk or a large share of gold projects being drilled. So, and that's continued. We have started to see an uptick in the number of base metals projects being drilled, but it still pales in comparison to gold activity.
And base metals, there's a lot of excitement about some of those, nickel, cobalt, just because the battery sector is kind of the way of the future.
Yes.
So, what are you seeing in terms of that?
Certainly. Nickel's been pretty flat. There wasn't really an uptick in exploration budgets in 2017, but certainly cobalt had a very strong year. We've been tracking cobalt exploration for probably 15 years now, and it really started to surge in 2017. I think the actual amount budgeted for exploration more than quadrupled, or roughly quadrupled. It's kind of coming off a very low base, so still a fairly small number, between 35 and 40 million for cobalt exploration itself. But certainly there's an increasing number of companies that are entering that space. So, similarly, I can cast that across to the lithium perspective too. There's been a very strong growth, even stronger than cobalt. I think there's over 130 companies exploring for it in 2017, and their budgets also went up by, I think it was quadrupled. So, very strong activity.
Is that due to stronger prices for the commodities, or is that due to more investor interest? What's your thoughts?
I think it's a combination of things. Historically speaking, exploration budgets have trailed metals prices with about a 1-year lag. So if you look over the past 25 years, that's been pretty consistent. And the junior sector is often keen to jump on anything that's of interest or an emerging commodity where prices are certainly rising. And so they definitely saw the prices going up and jumped on any projects that they could find that would have lithium. I would also say there has been a lot of investor interest, a lot of institution interest in that space as well, just because the EV scenarios are evolving so quickly. So it's definitely provided some more momentum to the junior sector as they focus on those commodities.
And can you talk a little bit about exploration and some of the need for new discoveries? I know particularly in the gold sector, there's been a lot of focus, a little bit of concern about needing to find new deposits.
Yes, that's certainly something that came up in the session a couple of times, and I did focus on it. We track exploration budgets by the stage of development, and for more than 20 years, we've been seeing all companies shift away from the early stage exploration, so the grassroots exploration that would really find a lot of the new big discoveries. So certainly companies have been focusing on finding new zones at their existing projects, or they've been shifting to look at or around their existing operations. And especially over the past 5 or 6 years with the downturn in markets and very little support for the junior sector at the time, that's been exacerbated. And I think this year about the same amount had been budgeted for mine site exploration as late stage exploration, and the early stage, the grassroots, certainly trailed behind those two categories.
And we're hearing a lot as well in some of the presentations about some of the majors partnering with some of the junior companies to kind of work together on some of the projects that they have. Do you see a lot of that happening?
Absolutely. Some of our data has been supporting that. There's been a definite uptick in the number of earning agreements between majors and junior companies. And I would expect that to continue. I mean, it's providing support for the junior sector. It's encouraging them to go out and explore, and hopefully they're looking for those earlier stage projects or those projects that have a lot of potential to meet the majors' thresholds for bringing them into development. And I think it also helps the majors in the sense that they have to look at their longer term pipeline. So if they're able to help juniors find that next suite of deposits that they can develop, it's going to help their long-term pipeline.
Are there any companies that are looking good? Any kind of projects that are coming online this year?
I don't think I can really comment too much on a specific company or project, but certainly there's, I can speak to some of the more noteworthy countries. Certainly Ecuador and Finland, they both experienced above average increase in their budgets for 2017. I think that's a reflection of improved sentiment, improved policies and government support. Conversely, on the flip side, a country like the Philippines with quite a bit of open pit bans on open pit mining, we saw a sharp reduction in their exploration budgets in 2017. So it certainly speaks to the volume that the politics and the regulatory environment in a given country can impact that exploration quite quickly.
So then what's your advice to investors?
I think it's sometimes difficult to look at the long-term view, but it's something I spoke to in my presentation, is that we need to be thinking more than 5 years down the road. We need to be thinking 15 to 20 years down the road, and where that suite of projects and mines is going to come from. And so if you can choose some companies that have a little bit more of a longer term view, who may be looking to do more of that generative or early stage exploration to find those new deposits, it would benefit the investor in the long run. You're going to see a nice return on your investment if you can stick with it, especially given the market volatility. So.
And can you talk about that volatility a little bit, some of the risk?
Yeah. There's so many different components and factors to that.
Right. Maybe just for this year then.
For this year, I mean, certainly the recent news of President Trump implementing tariffs on the steel industry, I'm not sure that's going to immediately impact the metals and mining sector or the exploration sector, excuse me, but
There's a huge reaction to that.
There was quite a reaction to it. I think it speaks to fears of an extended trade war across multiple aspects of industries, not just the steel. So I think that's probably about all I can say about that. In the longer term, I would hope that that will settle down, and some of some of the banter in the marketplace or some of the banter between different countries will start to settle down and allow the industry to move forward, because we've been set up pretty well over the last year and a half.
Is there anything else you wanted to add?
No, I think that's good. I think we're looking to have a good 2018 for the exploration sector. In my presentation, I was speaking about how we expect budgets to go up by about another 20% this year, and so there's a lot of busy people, and that's a good thing for the industry after a number of years of downturn.
Great. So get out there and explore, I guess, right?
Yes.
Is the idea.
Exactly.
Right. Cool. I'm Melissa Shaw with the Investing News Network, and here with Mark Ferguson, Associate Director and the Head of Mining Studies for the Metals and Mining Research Division of S&P Global Market Intelligence, and we're at PDAC.